Cryptocurrency is a term that's become increasingly popular in recent years, but what exactly does it mean? In simple terms, cryptocurrency is a digital or virtual currency that uses cryptography for security. It operates independently of a central bank and can be transferred directly between individuals or organizations through a decentralized system. Understanding the history of cryptocurrency is important because it can give us insight into how this new and revolutionary technology has evolved over time. In the early days of digital currency, there were several attempts to create a viable alternative to traditional currency. David Chaum's eCash, B-Money by Wei Dai, and Hashcash by Adam Back were all early attempts at creating a digital currency. However, none of these early attempts were widely adopted or successful. The birth of Bitcoin in 2009 by an anonymous person or group going by the pseudonym Satoshi Nakamoto changed the landscape of digital currency. Bitcoin was based on blockchain technology, which is essentially a digital ledger that records every transaction in a transparent and immutable way. The white paper on Bitcoin and blockchain technology set the stage for the development of alternative cryptocurrencies and decentralized systems. Altcoins emerged in the following years, with alternative cryptocurrencies like Litecoin and Namecoin gaining popularity. Forks in the Bitcoin blockchain also contributed to the rise of altcoins. As cryptocurrency gained popularity and acceptance, it also became subject to regulation and controversies. Governments and regulatory bodies responded to the rise of cryptocurrency, with some countries banning or restricting its use. Controversies surrounding cryptocurrency such as Silk Road and Mt. Gox also brought attention to the potential risks and challenges of using digital currency. Despite these challenges, the future of cryptocurrency remains promising. Experts predict continued growth and adoption of cryptocurrency, but also caution that there are potential challenges and opportunities on the horizon. In conclusion, understanding the history of cryptocurrency is important in order to appreciate the evolution and development of this revolutionary technology. From early attempts at digital currency to the birth of Bitcoin and the rise of altcoins, to controversies and challenges, cryptocurrency has come a long way. As we look to the future, it's important to continue to educate ourselves about this new frontier and stay informed about the latest developments. In this section, we'll be discussing the early attempts at digital currency that paved the way for the birth of Bitcoin and cryptocurrency as we know it today. First up is David Chaum's eCash, which was introduced in the early 1990s. eCash was a digital currency that used cryptographic techniques to ensure the security and privacy of transactions. While it didn't gain widespread adoption, it set the stage for future digital currencies. Next, we have B-Money by Wei Dai, which was proposed in 1998. B-Money was a decentralized system for electronic transactions that was based on cryptographic proof rather than trust in a central authority. This was a groundbreaking concept that influenced the development of Bitcoin and other cryptocurrencies. Lastly, we have Hashcash by Adam Back, which was introduced in 1997. Hashcash was a proof-of-work system designed to prevent email spam and denial-of-service attacks. This concept was later adapted by Bitcoin as a way to secure the blockchain and validate transactions. These early attempts at digital currency laid the groundwork for the development of Bitcoin and the cryptocurrency industry as a whole. Without these pioneers and their groundbreaking ideas, we wouldn't have the revolutionary technology we have today. In this section, we'll be discussing the birth of Bitcoin, which is considered the first modern cryptocurrency. Bitcoin was created by an anonymous person or group using the pseudonym Satoshi Nakamoto in 2009. Satoshi Nakamoto published a white paper on Bitcoin and blockchain technology, outlining a new type of digital currency that could operate on a decentralized network without the need for a central authority. The blockchain technology used in Bitcoin allows for transactions to be recorded in a transparent and immutable way. This means that every transaction is verified and recorded by a network of computers called nodes, making it difficult to manipulate or alter the transactions. The first Bitcoin transaction occurred on January 12, 2009, when Satoshi Nakamoto sent 10 Bitcoins to Hal Finney, a developer and early adopter of Bitcoin. This transaction demonstrated the potential of Bitcoin as a decentralized digital currency and laid the groundwork for its rapid growth and adoption. Bitcoin's success as a decentralized digital currency inspired the creation of other cryptocurrencies, known as altcoins. These alternative cryptocurrencies sought to improve upon Bitcoin's design and address some of its shortcomings, such as transaction speed and scalability. Overall, the birth of Bitcoin marked a major milestone in the history of cryptocurrency and blockchain technology. It introduced a new type of digital currency that operates independently of traditional financial institutions and has the potential to disrupt the traditional banking system. As we'll see in the next section, the rise of altcoins and the increasing adoption of cryptocurrency have paved the way for the future of this exciting and rapidly evolving technology. In this section, we'll be discussing the rise of altcoins in the world of cryptocurrency. As Bitcoin gained popularity, developers began creating alternative cryptocurrencies, known as altcoins. These altcoins were often created to address specific limitations of Bitcoin, such as transaction speed or privacy concerns. One of the first altcoins was Litecoin, created in 2011 by Charlie Lee. Litecoin was designed to be faster and more efficient than Bitcoin, with quicker transaction times and lower fees. Another notable altcoin is Namecoin, which was created in 2011 as a decentralized domain name system. Namecoin operates on the same blockchain as Bitcoin, but with an added layer of functionality that allows for the registration of domain names. In addition to these specific altcoins, there have also been numerous forks in the Bitcoin blockchain. A fork occurs when a new cryptocurrency is created by copying the existing code of another cryptocurrency. Some of the most well-known forks of Bitcoin include Bitcoin Cash and Bitcoin Gold. While altcoins have gained popularity and expanded the world of cryptocurrency, they also pose challenges such as fragmentation and dilution of value. However, they have also provided a platform for innovation and experimentation in the development of blockchain technology. That concludes our discussion on the rise of altcoins. In the next section, we'll explore the acceptance and adoption of cryptocurrency by businesses and individuals. In the early years of Bitcoin, the cryptocurrency was seen as a novelty, and its adoption was limited to a small group of enthusiasts. However, over time, more and more businesses and individuals have come to accept and use cryptocurrencies. One reason for this acceptance is the increasing number of merchants who now accept Bitcoin and other cryptocurrencies as payment. Major companies like Microsoft, Expedia, and Overstock.com have embraced Bitcoin as a form of payment, as have a growing number of small businesses. In addition, the ease of use and the speed of transactions with cryptocurrency have been attractive to consumers, especially for cross-border transactions. Sending Bitcoin across the world is faster and cheaper than using traditional money transfer services. However, the price volatility of Bitcoin and other cryptocurrencies has been a significant barrier to their widespread adoption. The value of Bitcoin has seen massive fluctuations, with sharp rises and sudden drops in price. This volatility has made some businesses and investors wary of cryptocurrencies. Nevertheless, the increasing acceptance of cryptocurrencies has shown that they are becoming more mainstream. As more businesses and individuals embrace these digital assets, it will be interesting to see how the cryptocurrency landscape evolves in the years to come. In the world of cryptocurrency, regulation and controversies are inevitable. Governments and financial institutions have different views on how to handle digital currencies. Some countries have embraced cryptocurrency, while others have outright banned it. Regulatory responses vary from country to country. Some governments have implemented strict regulations, while others are still figuring out how to approach the issue. Some have even issued their own digital currencies, like China's digital yuan. Controversies also surround cryptocurrency. One example is the infamous Silk Road, a dark web marketplace where people could buy and sell illegal goods using Bitcoin. Another example is Mt. Gox, once the world's largest Bitcoin exchange, which collapsed in 2014 due to a massive hack. These controversies have led to debates about the legitimacy and security of cryptocurrency. However, as the technology continues to evolve, it is important for governments and institutions to adapt and find ways to regulate it in a way that protects consumers and prevents illegal activities. In this segment, we'll talk about the future of cryptocurrency. With the rising popularity and acceptance of digital currencies, it's important to look at the potential opportunities and challenges that lie ahead. One of the most promising aspects of cryptocurrency is its potential to revolutionize the financial industry. Blockchain technology can offer a more secure and transparent way of conducting transactions, without the need for intermediaries like banks. This could lead to faster, more efficient transactions, and reduced fees. However, there are also challenges that need to be addressed. One of the biggest challenges is regulatory uncertainty. As governments and financial institutions struggle to keep up with the rapidly changing landscape of cryptocurrency, regulations can vary widely and be difficult to navigate. Additionally, the volatility of cryptocurrency prices remains a concern. The value of digital currencies can fluctuate rapidly, making them a risky investment. However, proponents argue that as the market matures, this volatility will decrease. Overall, the future of cryptocurrency is still uncertain. While there are certainly opportunities for innovation and growth, there are also challenges that need to be addressed. It's important for investors and consumers alike to stay informed and cautious as this technology continues to evolve. In conclusion, the history of cryptocurrency is a fascinating and important topic to study. From early attempts at digital currency to the birth of Bitcoin and the rise of altcoins, to the acceptance and adoption by businesses and individuals, and the controversies and regulations surrounding it, cryptocurrency has had a significant impact on the world of finance and technology. Looking to the future, predictions and potential challenges and opportunities abound. While some see cryptocurrency as the future of money and transactions, others remain skeptical of its volatility and potential risks. Regardless of one's stance on cryptocurrency, it is important to continue learning about and staying aware of developments in the field. As the world becomes more digital and interconnected, cryptocurrency will undoubtedly continue to play a significant role in shaping our financial systems and economies.